Every investor at some point asks the exact same question. What is this thing actually worth? You got to cut through all the hype, all the noise on social media, and figure out the real solid value of an asset before everyone else does. So let's get into how you do that.
When you're trying to figure out what's moving the price of a stock, or any asset really, you'll find that people usually fall into one of two big camps. Are you someone who trusts the charts, looking at patterns and believing that history is just going to repeat itself? Or are you the type to get your hands dirty, digging through financial reports to understand the actual health of the business? It's a huge difference in how you see the market.
So here's the game plan for this breakdown. First, we'll look at those two major schools of thought. Then we're going to do a deep dive into fundamental analysis. That means looking at the hard numbers and the story behind them. And to wrap it all up, we'll talk about finding the catalyst. That's the special event that can make an undervalued asset finally get the price it deserves.
All right, let's kick things off with our two rival philosophies. Think of it like this. In one corner, you've got the chartist, a master of reading charts and patterns. And in the other corner, you have the detective, who's all about investigating the fundamentals.
And this slide, right here, really gets to the heart of it. The chartists, who practice technical analysis, believe that everything you could possibly need to know is already reflected in the price and the trading volume. It's all about market psychology. The detectives, on the other hand, they're the fundamental analysts. They're digging deep into the business itself, asking, is this a strong, healthy company that's built to last? And here's the key takeaway, the big difference. Technical analysis helps you decide when to buy. Fundamental analysis helps you decide what to buy.
So these chartists have a whole toolkit they use to try and predict what the market's going to do next. They look for these classic patterns in a stock chart, things that might signal a big move is coming. They also use all kinds of indicators to measure momentum, like if an asset is maybe overbought and about to drop. The core idea for them, all the news, all the data, it's already baked into the price. So the only thing worth studying is the price action itself.
Okay, so let's shift gears and focus on the main event, fundamental analysis. This is where the detective work really begins. It's all about ignoring the day-to-day market chatter and, popping the hood to see how the engine is really running.
The entire mission of fundamental analysis can be boiled down to this one idea: intrinsic value. It's the belief that every company has a true worth, a real value based on concrete things like its assets, its profits, and its overall financial strength. The detective's job is to figure out that number and then compare it to the current price on the market to see if it's a bargain.
There's this famous line from Benjamin Graham. He was actually Warren Buffett's mentor, and it just captures this philosophy perfectly. In the short term, the market acts like a popularity contest, a voting machine. Prices go up and down based on hype, but in the long run, what really matters is the company's actual substance, its value, its weight. And that's the core belief of every fundamental investor.
So how exactly does our detective figure out this intrinsic value? Well, the investigation has two main parts. The first part is quantitative. It's all about the cold, hard numbers.
Yep, this is basically the forensic accounting phase. The primary evidence comes from a company's official financial statements. You've got the balance sheet, which tells you what a company owns versus what it owes. The income statement shows you if it's making a profit, and the cash flow statement, well, that tracks where the actual cash is going. These documents are the bedrock of the whole investigation.
Now, from those documents, analysts pull out key ratios to find clues. For instance, the PE ratio, or price to earnings, helps you figure out if a stock seems cheap or expensive compared to its profits. A high return on equity, or ROE, is a great sign that management is really good at making money with the money investors give them. And the debt-to-equity ratio is kind of like a financial stress test. It shows you if a company is relying way too much on debt. These numbers give you a really quick snapshot of a company's health.
But look, any good detective will tell you that the numbers never ever tell the whole story. And that brings us to the second, equally important part of the investigation, the qualitative analysis.
This is where things get a little more subjective, right? You start asking bigger questions. Like, what's the actual business model here? Does the company have a serious competitive advantage, what Warren Buffett famously calls a moat, that keeps competitors at bay? Is the management team actually any good? Do people love the brand? These are the kinds of intangible things that can truly define a company's future.
And you know what? Sometimes one of these qualitative factors, one of these story elements, can be a hidden treasure that makes a company way more valuable than its current financials might suggest. This is where the best detectives really earn their keep.
Let me give you a perfect example.
The story of Straight Path Communications. Back in early 2017, if you just looked at their numbers, they were meh. The stock was trading around $36 a share. But, and this is a huge but, they had a hidden qualitative asset, a massive portfolio of FCC licenses that were absolutely essential for building out the 5G network. Once AT&T and Verizon caught on, a crazy bidding war started. And in the end, Verizon bought the company for $184 a share. That's a 400% premium, an absolutely insane value that was totally invisible if you only looked at the numbers.
Okay, so our detective has done all the homework. They're convinced they found a seriously undervalued company. Now what? I mean, what's going to make the rest of the market wake up and notice? They need a catalyst.
A catalyst is basically the trigger. It's that specific event that forces everybody to suddenly reevaluate the company, pushing the stock price up toward its true intrinsic value. You see, without a catalyst, a cheap stock can just stay cheap forever.
And catalysts can be all sorts of things. It could be a new regulation that helps the company, a game-changing new product launch, or even just bringing in a new CEO. Big corporate moves like mergers or massive stock buybacks can do it too. For Straight Path, the catalyst was obvious. It was that bidding war that subtly put a giant spotlight on the hidden value of their 5G licenses for the whole world to see.
So, to wrap this all up, let's put these two schools of thought side by side one more time. The detective, using fundamental analysis, is obsessed with the what. What is a great business to own for the long haul? The chartist, using technical analysis, is all about the when. When is the perfect moment to jump in or get out based on the price action?
But here's the real secret. It doesn't have to be one or the other. In fact, a lot of the most successful investors out there are actually a hybrid of both. They'll use fundamental analysis to find those amazing, high-quality, undervalued companies, that's the what, and then they might use a little technical analysis to help them nail the timing and find a great entry point, that's the when.
So that brings us to the final question, for you. Now that you've seen both sides of the coin, which approach feels more like you? Are you drawn to reading the charts and the market's psychology? Or do you want to be the detective, solving the case of what a business is truly worth? Or maybe you realize the smartest path is to be a little bit of both.
Speaking of analysis, I'm curious what you want me to look at next. What crypto project should I do a deep fundamental analysis on? Let me know in the comments below. And hey, if you found this breakdown helpful, do me a favor, hit that like button and make sure you subscribe for more.